Good morning, traders, and welcome to Serene Education this morning, the 28th of September 2012. It's a Friday, a very cold Friday out here in Wales. And what is happening today? End of week. Let's have a look and see what we can expect to see today. First thing of note, Euro US dollar in front of me, 4 time frames, weekly top left, working our way to the hourly bottom right. But the first piece of news that I need to tell you guys about is the Spanish bank stress test results today, guys. They're running stress tests on the Spanish banking community today. That's a tentative result, one to really be aware of. We know Spain's in a bit of problem at the moment now. We want to see how these banks hold up to these stress tests. So it's very, very, very important to see how these come out. So if there's one result we need to worry about or take heed, is the actual Spanish bank stress test result. And these are tentative. This could be run anytime this morning, this afternoon. It's a figure that's going to come out sometime today. But if you're not trading, maybe it's one that we should just stand aside, because if these banks, or the majority of the banks that take part in the stress test, don't come out with a positive result, or if they don't cut the mustard, is the way they put it, then we could see some volatility on the Euro US dollar pairs, or your cross pairs, Euro Yen, for example. So before that, let's carry on. Let's see what else has been happening. Bearish Arami this week, or last week, apologies, after this massive move to the upside and a nice little correction. So we wanted to see the low of July all the way to the current high now, just around here at the highs in September, and you can see the fib retracement, and you can see that 23.6 fib retracement area has come into play. Notice we'll punch below the 12,900 and now consolidating above the 12,900, which constitutes the 23.6 fib retracement level. The CTC histogram on other side still remains negative, so the sentiment is still looking negative, and primarily because we're still trading below that institution earnings in general. So two parts to a positive setup here. A lot of movement through the last couple of months. However, we do need to see price moving and trading above that institution moving average to see any form of this long-term templates really stacking up. The daily, you can quite clearly see here, we've had a noticeable pullback. I've taken the low here that we saw in July to the high, the major high recently in September, and you can see where price is trading now in relation to that. I've drawn a major support and resistance level at 1300, primarily because we had a lot of consolidation through this period before, and I was expecting price, if we saw a break above it, to potentially use this area over here as a major support area and for price to bounce higher. That wasn't the case, and we saw price putting further back than the 23.6 and closing at the underside. Yesterday, unfortunately, we saw this move back up to the underside and closing higher than that 12,900 or the 23.6. But you can see clearly finding support or bouncing off the 20 and the institution moving average on that level. So if we were looking for downside, it would have been potentially looking more favorable to see price actually trading below that. But you can see how the institution moving average, the 20 period moving average, as well as this upside trend really coming into focus now and keeping price above the waterline. So trading above the 12,900 again. If it can remain above here, then we should be targeting the 1300 for the foreseeable future. Get above that, then we should be targeting these prior highs here at 1500 and higher. So the 4-hour chart looks like this. We have the CTC remaining pretty much negative across the board. RSI is just trading above the 50% line. Not a very convincing one. If to see this to really be positive long term, we'll probably want to see price trading above the 300 or 1300 mark here. That's on the chart. You can see the intermediate trend is still negative. Okay, you can see price is now going to be trading into that level now quite soon as we head into this 50 period moving average. So just remember, we've got to be trading above 1300 to see all these highs way up here, just around the 1500 mark being our ultimate target for the near future. So as it stands, we're moving to the hourly chart. You can quite clearly see that the institution moving average is still above price on this time frame. Yes, we're seeing the RSI trading above the 50% line. However, we're still trading below a major resistance level here in the shape of the 1300, and we've got that institution moving average as well. So everything's looking good, but we've got that institution moving average above us to really worry about, and it's the first time price has really been trading below the institution moving average in a number of weeks and months. So Very, very important. We do need to see price trading above 1300 again to give us a clear indication that we should be still looking for positive upside movement. We have had price actually bouncing at the 1285 here, which constitutes to that institution moving average on our daily. So if you can put that in another color just to confirm that. There we go. So ideally we'd like to see price trading below that to give us an indication that 1275 was going to be back in play. However, that failed to materialize. We saw this hammer formation on an hourly, and we saw a lot of positive upside movement once we got the hammer here at 5 GMT last night. So RSI, everything's looking good for Tenta and moving to the upside. Let's move on to sterling, and here again you can see that we had a candle last week, very indecisive candle at the underside of resistance here at 1300. During the latter parts or the earlier parts of this week we saw price trading lower. However, you can quickly see that price is now moving to the upside, and we do need to see a decision candle. Either way, it's either going to be a high or a low. We do need, if this is to be still remain positive, we need to see price closing higher than 16300, or if it's going to be negative sentiment because we're trading into a major resistance or a weekly resistance, then we need to see a bearish engulfing candle. So on the daily, you can quickly see a lot of hesitation at the upper end of this, and the longer it trades above this upper range, then the more likelihood we want to see price, or should see price retesting those highs at 16300. It is imperative that we see price trading higher than that. Otherwise, all these exhaustion candles, this major exhaustion candle here, would constitute to further exhaustion to the downside. But we would need to see a bearish engulfing candle confirming that. You can quickly see we've had a lot of indecision candles, very small trading ranges, and then yesterday's range really punching high with a bit of gutso and pretty much taking away 3 days worth of negativity on the market here. A nice bullish engulfing candle, and price on the Asian session going into the European session this morning moving higher. A slight pullback as we head into that 16300, that major resistance level above us. So on our 4 hour, you can see the tentative moving to the upside. Not a genuine break lower on the 4 hour. Very, very indecisive break to the downside. We'd like to see more of a bullish or bearish engulfing candle at the underside of this 23.6 February retracement to really give us an indication that prices definitely looking to break and to move to the downside towards that 38.2 on our 4 hour. That failed to materialize as we saw these little clear indecisive candles, a lot of wick and not a hell of a trading range. So a lot of indecision in those moves to the downside, and that pretty much just couldn't shake off that negative sentiment, and price rallied to the upside. A lot of indecision candles after we saw going into 2 p.m. GMT last night or yesterday afternoon. We saw this bullish engulfing candle, and price has now moved to the upside. It is now trading above the prior swing low. Here we go. You can quite clearly see on our 4 hour, if I extend it, you can see price the last 4 hours has seen price punching above the prior swing low resistance here. And now as long as it remains above that, then we could see price moving towards that 16300 intraday to the upside. So if you're looking for price to find support now on an hourly, look to see if price can actually stay above this level here at the, what's that, 21, 22, 23, 24, 25. So if you can stay above 16,2500, then we should be seeing price make a tentative move to the upside. Onto US dollar Swiss franc, let's have a look and see what's been happening on this particular pair. Noticeable fall from the highs here at 1,000 over the past couple of months. The US dollar really finding negativity in the market against its Swiss pair, and in doing so, really moving below price support and resistance levels. I've taken a February retracement from the previous or the current high at 1 all the way down to this consolidation here. You can see that we've had a weak consolidation. Price pulling up to the 23.6 February retracement area here at 940, and now you can see the price is now trading at the lower end of the wick. And with that doing so, you could see, I don't know if that's going to give us a genuine sentiment that we should be looking for price to consolidate here just slightly, and we could see really another push to the downside in the next couple of weeks. It's important. You can see the CTC has gone negative across the board, and what we're looking for now is for price to stay below that 940 now, which constitutes that 23.6 Feb retracement level. If we look on the daily now, you get a better picture. There we go. So you can see my all-time high at 1,000, price really putting back, and in doing so trading below all the moving averages. That 940 very, very important, because on the daily you can see that price is trading below the institution moving average for the first time since a similar period last year. In October last year we had this little fake breakout, but you can see before then price was trading well below the institution moving average, and since then we've seen price trading above the institution moving average up until now, where a break in September has seen price consolidate at the 930 mark or 925 before we've seen a bit of upside movement, a pullback, and you can clearly see over the past couple of days price finding resistance at the 940, which constitutes to the 20 as well as the institution moving average at the same area. The trend line you can see is very much in play as we speak. Is a negative trend line from those highs we saw back in July of this year, when we saw price heading into this major support and resistance level high here at the 1000. So see both ranges trying to punch higher than the 940. However, by the end of the close of play, price has been hugging the lower end of that candle, so trading lower than 50% of that candle. And is that a sentiment telling us now that we should be looking for bearish engulf? Ideally, we want to see a bearish engulfing here to tell us this is clearly now resistance, and price would be moving to the latter part or to the downside again, targeting the 930 and the 925 before we see all-time lows heading towards these ones down here at 890. It's imperative that we do see a bearish engulfing candle to confirm that. Otherwise, we could see price hovering around that 940 mark as we see in the past couple of days. The 4-hour time frame shows us that the intermediate or intraday time swings have been higher, so that constitutes the price moving higher. You notice that 50%, the RSI is trading above the 50% line here, and negative as we move into the 4 hour, the past 4 hours. However, we want to get away from, we want to see a genuine sentiment candle, bearish engulfing here. These wicks are too small. These candle ranges are far too small. A lot of indecision candles as we head into that 940. We want to see price moving to the downside with a lot of negative sentiment. Bearish engulfing to confirm that this is generally a major support and resistance level here at 940. Otherwise, we could see prices hovering around this area for the foreseeable future. Hourly entry candle shows us a different picture altogether. You can see that 940 above us. However, for the first time, you can see the institution moving average below price. So it's supporting price as we go into this consolidative resistance level above us. Okay, this intermediate trend you can see has just been broken recently since we had a close lower last night at 7 o'clock GMT. After that clear exhaustion candles at the top here, you can see quite clearly we fell during the midday session yesterday at that 940 mark, and price has been heading lower. You can see after that other attempt at the top here, you can see RSI is clearly falling away, so telling us this is a resistance level, but the institution moving average is below price now. So as long as it maintains this level here or around these levels over here and primarily above 930, then we should see price reattempting this 940, 941 area before we see price breaking higher. If we're going to see the opposite, and this is a genuine resistance level here, we do need to see price breaking below the institution and getting below that 930 as soon as possible. Get below that would definitely constitute that we're seeing a major resistance level here. So it's a break, pull back, and then we'll see continuation in the direction of the trend. So we are trading between a 940 and a 930. So this is going to be a range where we need to take heed, because the institution's below price as well as this 930 mark. Very, very important. Last pair of the day is US dollar Japanese yen. This particular pair still battling or fighting with the downside trend. We've seen price consolidating between 78 and the 80 just recently. However, the 78 being a major support in the past 4 months, apologies. You can see quite clearly here heading back towards these price support and resistance levels here at 78 support through here, through the early parts of June. A lot of support through the latter part of July going into mid-August, and then a breakout through the early parts of September. However, we've seen price move back up against after the Fed intervened with quantitative easing, and since then we've seen price rolling over again with this evening star formation at the underside of the institution moving average, and price getting back below the 78 again. A lot of indecisive candles, still trading low but very indecisive nonetheless, and now we're seeing price starting to pick up a bit of momentum, and now it's heading into this consolidative prior support over here, breakout that we saw not so long ago. So heading into, we've got to be aware of that, because that's now going to show on our intraday time frames, as you can see quite clearly, see that price moving to the downside. Not very, very convincing, very small trading ranges, but then the yen trades it's got a very small trading range. So getting as long as it stays below 78, then the sentiment is still going to be negative long term. You can see the histogram on our 4 hour is still telling us that, or confirming that, as well as our RSI is below 50% line. All our moving averages above price, telling us that the sentiment is generally should be looking negative. And you can see the 20 period moving average here doing a good job of actually capping price to the downside. So one thing we've got to worry about is the lower the US dollar trades against the yen, is there a likelihood of the Japanese government intervening? We've seen in a number of cases over last year in particular, the Japanese government actually intervening to try and prop up the US dollar as she continues to fall or against the yen. And a lot of people will be wondering, will we see any intervention from the Japanese government the lower we tend to see price moving to the downside below 78. So that's going to be on everybody's minds at the moment now. You can see this low over here. Price heading into the prior lows, however, you can see the RSI has been getting stronger. But you can see quite clearly just here, you can see RSI is trading in this range over here. So one to watch, because we could see potential pullbacks, and because we are trading in this consolidated range. So one to watch, guys. I wouldn't be trying to dive into this head first unless we see some really negative figures coming out. That's definitely going to keep pushing price to the downside. Okay, so that's it for the end of the week. Hope you have a fantastic trading day. Please be aware we have those all important. We got the Spanish bank stress test results today. That's a tentative result for the Spanish for Spain. Very important, because we know that Spain is going through a lot of problems at the moment now. There's a lot of negative sentiment coming out of Spain, and it'll be interesting to see how these banks actually do against these stress tests. Okay, so that'll give us a real genuine look at how much the banking sector in Spain is actually doing. And if they actually fail, a lot of the banks actually fail, then it's telling you that the warning lights should be really going. So one to watch today in particular. Other than that, please, if you're following this rule, if you are trading the CTC strategy template, please back it up with sound money management and to follow the rules of the template. Very important. Other than that, hope you have a fantastic weekend with family and friends, and I'll see you first thing on Monday morning. Until then, trade serenely.